Welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield, and it is heading into a 3-day holiday weekend. What type of trade did we see? Was there a lot of holiday feel to it? But more importantly, what's going on in South America? We saw some drop when it came to their crop ratings in both corn and soybeans. And then we've got a Monday trade that doesn't exist until the evening. But let's throw in the fact that there's an inauguration going on. Lots that we're going to break down, and not included the fact that we had a cattle market that had an interesting trade once again this week. Stick around. More's coming up after this.
It may be small, but this little bean fuels power. It powers a food industry as a source of protein. It's a fuel that powers diesel engines while reducing emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
And welcome back once again. As you can see, joining me, we have Arlan Suderman with StoneX and Sue Martin with Ag and Investment. So this is going to be a wild and fun marketing ride as we talk about what's happening in this trade with both of these. And I think we need to start out with, and I know, Arlan, I had seen some writings that you had done in regards to China and beans and purchasing them from the U.S. versus South America and what it all had to do with price. And it was kind of interesting to see where we're at and where their thinking process is at.
Yeah, and I wish I had $1 for every time I've been asked by somebody in the media here over the last couple of months what are the markets trading the tariff threat in the soybean markets. If they're down, are they trading that threat? And my argument has been, it doesn't make a difference in the near term. Long term, maybe, but it doesn't make a difference because our currency exchange rate is the problem. If you look at soybeans right now, if Chinese crushers are looking to buy soybeans and you look at buying from the U.S. Gulf or from Brazil, what they buy from Brazil for shipment next month are going to be roughly $1 a bushel cheaper. Doesn't have to do anything with tariffs. So they're already making that switch. They are buying some from us yet that are going into their reserve because Brazilian soybeans don't store well in their reserve. And so they either buy U.S. or Argentine, and Argentine aren't going to be available for a while, and they don't know what the size of the Argentine crop is. So they are buying some from that purpose. Tariffs will matter more as we get into the effect it might have on trade as we get into July, August, and they're starting to buy for the fourth quarter of this year. But for right now, our big problem is the strong dollar.
So what about for you, Sue? What are you hearing in regards to the China and tariff and soybean chatter, or just grains in general?
Well, I think, we've heard so much of that buzzword tariffs. Analysts throughout the commodity industry have talked about it constantly. We've had, of course, the media talk about it constantly, to where these foreign countries, not only China, but other countries, they're pretty well prepared. They know what to expect. And I think it's going to surprise us. Probably when it comes to corn, yes, China might still go to Brazil for corn as well, although there's some still ifs out on the table on that one. But I would have to say, when I look at beans, the market's been oversold. We're getting some corrective rally here. I'm just a little leery of how much more it's got left to go. Weather will play a big part coming out of Brazil. And of course, they've had their share of weather issues, kind of a mixed bag. Mato Grosso, for example, very slow in harvest compared to a year ago. So I think that it's going to take something weather-wise. I think we could be strong into maybe the very end of the month, January 30th, possibly February 4th, right around in there, put a high in on beans, and then we start our decline with their harvest getting more ensued. But there's some really interesting, this is going to be an interesting year.
Oh, very much so. Arlan, you're shaking your head in agreement. And I know that you've got some boots on the ground with your company. What are they feeding back to you as to how this crop looks in general, both corn and soybeans?
Yeah, and I would agree. The market's priced in a lot of the negative right now. And so it'd have to be fresh negative here that would really want to drive the markets lower. And as we look at the crop in Brazil, we've been wet in the north, but if you look at the rainfall totals, they're pretty similar to what we normally would get in north and in dry in areas of the south. And we've seen some crop stress. In fact, in Rio Grande do Sul, which is a significant producer in southern Brazil, and later planted crops, so more possibility for damage there. Our estimates right now from our team in Brazil is we've lost 2.4 million metric tons. They just increased their overall production first of the month to 171.4, which is a record amount. That was up 5 million metric tons on the month. Now, if you pull that back 2.4 million metric tons, but they said, oh, wait a minute, we've started a harvest in center west Brazil. Yields are coming in higher than what was anticipated. So we're going to offset some of that. But they're kind of anticipating when we do our February survey that perhaps we'll end up somewhere in that 170 million metric ton range, which is still up about 20 million metric tons from last year. So we don't see any real market moving news there in Brazil.
Sue, does it come as a surprise, or maybe not, the way this weather has been for them, that we saw such a drop back on crop conditions for especially soybeans?
Well, I think that when I look at Mato Grosso, the far southern part caught some pretty heavy rains here overnight. And basically that's an area where they're dealing with, too dry in part of the state. Number one producer, Rio Grande do Sul's number 3 producer, and Paraná, which would like some moisture, is number 2. So I think that when I look at the weather there and the lateness of taking the beans out, getting them harvested, means the safrinha going in is going to be a little bit delayed too. Now we've got time to worry about that, but that is something that I think is on the table for the corn market. What I think when it comes to China, and I'm kind of switching gears just a touch, but I think when it comes to China, the one thing I could see them coming at us for is probably cotton. I could see China coming into our market and buying a lot of cotton from us. Their growth in December was 5.4%, much better than anyone was thinking. I think November's growth was around 4.6. So a huge improvement for them. If that continues, well, that means their textile industry should start to take off.
And I know that there's some sheep producers that are listening to you talk and hoping they pick up on that American wool side of it as well, but we don't cover sheep markets here in this program. Arlan, you and I talked midweek as information was just coming out in regards to 45Z. Give us a nutshell breakdown as to what this really is going to mean, because there's a lot of data that's been released.
There really has been, and a lot of it's been government speak, and so we saw in phases, we've seen information come out from different departments. The big question was the 45Z guidance, and had it come out a few months ago, it would have meant a lot more. Now it just goes into an extended comment period, which means it's up to the Trump administration to put into gear. And what we don't know is, will they accept it as is? Will they modify it, or will they throw it out altogether? We simply don't know. And so if you're a fuel processor, do you buy feedstocks not knowing whether you're locking in a profit or loss? And so for the most part, fuel processors are choosing not to produce. So they've curtailed their production by maybe 40% or so. And that's reducing demand for soy oil. Now, the details you asked me about. Overall, if you look at the details, it's good to have clarification. We just don't know how much it means, as I indicated. And when you run the numbers through, particularly after the recent rally we've had in soy oil prices, it helps close the gap, but it still leaves us in negative territory. In the spreadsheet that they released from USDA for farmers to use to determine what practices they could follow to get credits, what a nightmare for ethanol plants trying to do the paperwork to make sure every producer, what has they done? What has farmer A done? What has farmer B done? And then working your way through this kind of antiquated spreadsheet, frankly. I think they've created problems, and we haven't brought profitability back to things yet. So rather frustrated overall. And I guess as Sue was saying before we came on, maybe it gives Trump an opportunity to do some good and make some changes.
Time will tell in that regard. Stu, did you see some pressure for the cattle market as we headed into a weekend and a 3-day holiday weekend for them?
Well, I think that the cattle market being able to bounce back after Thursday's break was kind of a change of behavior. You know, cattle since the late December low has had a rally effort on every Thursday and Friday. And so to have a down Thursday like we had certainly came off of the border talk that we were going to see the border open for feeder cattle. But then today it started to bounce back, and we came off of yesterday's lows too on this news that, well, it's going to maybe open January 20th, the week of that. But also it's going to be very slow because they have to get the protocol tested and in place. So, but it's going to be interesting because cattle have been very dominant, very aggressive. The cutout's been super, especially the select this week has been just very strong. But there's an end to everything. And the fact that the February contract of fats had basically an inside week closing lower, and then the rest of the contracts made higher highs but didn't hang on to it and close lower. And then you have the feeder cattle, the January that's been leading the way, didn't perform on Friday. It seems to me the market is kind of showing its hand that it's losing some steam up here and that we could see this market set back.
So Arlan, could part of that be consumers saying, okay, we're done. We need to back off these prices a little bit?
Well, that's what we've been watching for, but I think the evidence of that, hasn't really indicated it as such yet. What I'm worried about is at some point, will we see something happen in weeks ahead that causes that consumer sentiment to fall? I think the nervousness in the market is the heavy ownership by managed money. And the feeders have largely been heavily hedging this market. So if managed money does decide to exit, who will take the other side of the trade? And that's certainly a concern out there for a lot of cattlemen that I've talked to overall. What was ironic is the big sell-off on Thursday came with an increase in open interest. We would have thought maybe it was some fund money long liquidation, but that doesn't look like that was the case at all.
And for you, Sue, what are you thinking when it comes to these prices? Are we going to veer off to other proteins?
Well, I think for the consumer, they'll probably shift over to pork. Pork's been very reasonable. I think that's a whole nother story too in the marketplace here. But when I look at the cattle, I would have to say a major portion of this drive in the cattle market has basically been driven by the, by the price of ground beef, the cow slaughter. It's not been what it should be. And therefore, that has driven the price of hamburger up, which I think, of course, that's your biggest product that the consumer, a lot of these immigrants that have come into this country, they're meat eaters. And of course, ground beef, everything's so high priced. That's when you got children, you use ground beef a lot. And so I think that it's the ground beef that led this market up. I think this market's teetering, and in a year of a 5, I went back through 1985, and so every one of them, not that that has to mean it happens again, but every one of the years ending in a 5 had the January break, which is somewhat of a seasonal occurrence. And I think we're starting that January break.
All right. Well, I appreciate both of you joining us today. Just a reminder, we are headed into a 3-day holiday weekend, means no markets until the evening trade heads into that overnight. A quick reminder that commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And all information on the show is provided for educational purposes, not intended to influence legislation, government policy, or action. And that's been the Nebraska Soybean Board Weekly Market Roundup.